All right, there we start to have some attendees rolling in, and welcome to another Wednesday webinar. We're a few minutes late. Sorry about that. We're having some technical difficulties. But today I have a special guest with us, and I want to get right to it because we have some interesting stuff to talk about. Today we are talking about how to qualify for non-traditional loans, and I have a special guest with me. I have Kara DiStefano from REM. She is the regional sales manager. Hey, Kara, how you doing?
Hi. Hi, everyone. Happy Wednesday. Yes, it is. It's hump day. All right.
I wasn't sure if it was Tuesday or Wednesday, but it's Wednesday.
I know, right? Me too.
But I'm really excited to chat with you about some of these products. I've only used a few of them. So I'm really excited to get started. So let's go ahead and get right into it.
All right.
Today's agenda, we're going to talk about what is non-QM. We're going to talk about a 1099 program. We're going to talk about asset qualifier, profit and loss, foreign national, bank statement loans, investor cash flow. And then I'm just going to briefly talk about, are these products available in Puerto Rico? So what is non-QM? And Kara, I actually got this information from the presentation that that you sent over to me. I don't remember if you know what it said, but non-QM is kind of that middle ground between traditional financing and maybe that hard money commercial financing. And so that's really the best way I can.
Yeah, it's true. And it does. It brings it. It's the best of both worlds there. So it takes a lot of the features that you can't do in the in the traditional market world. And then it will also combines with some of the things that otherwise hard money lenders were doing without some of that risk that's associated with that. A lot of hard money is usually balloon type mortgages, lots of high point type stuff, and almost commercial lending in some respects with some of that. And it kind of takes the best of both of them and it hybrids into a non-traditional product is really what the definition would be. Yeah.
There you go. And I think that non-QM, I know that we've been talking about non-QM for a while and it's getting a lot more popular. And honestly, I personally feel it's going to get a lot more popular in the upcoming years because I feel that what COVID did, oh, there she is.
Yes, here I am. I figured it out.
I feel like what COVID did was allowed people to become self-employed. And so that was 2020. So 2021 is really going to be their first year of self-employed. 2022 is going to be their 2 years of self-employed. So I feel like 2023 and beyond, these products are really going to explode as these non-QM products roll out. So let's go ahead and get started. The first one is 1099, which, 1099 basically means you're self-employed, usually a real estate agent. I haven't done a 1099 product. So Kara, do you want to tell us a little bit about how this 1099 product works?
Yeah. And it's funny because a lot of times when people are thinking alternative, like bank statement products, a lot of times I'll see if it's a realtor, I'm like, why don't we just go 1099? It's a heck of a lot easier than trying to average deposits. So the 1099 product, just like you said, it offers for 1 and 2 years 1099 products. It's great for contractors. It's great for realtors. It's great for those truck drivers. Those are always the ones that nobody ever really can figure out, that they get paid per load and things like that. So, but they get paid 1099. And it is a great product for that. And it's real simple. It just takes 75% of the 1099 income and uses that for qualification. Look at you. Wow. So when you've been doing these realtors as bank statement programs, it's a much easier product to maneuver. Not only that, a lot of times 1099 borrowers don't have business accounts set up. They have personal bank accounts set up. And if they have personal bank accounts set up, it's automatically 50% of the deposits, the eligible deposits that go into that. If they don't have a business account associated with it. So the 1099 is a really great alternative and it lends at the same LTVs and financing. And the pricing is exactly the same as a 12 or a 24-month bank statement program. No change on the pricing.
Wow, that is awesome. Kara, are these available for purchase and refinance as well?
They are. They're available for purchase and refi. They're available on all, eligible on all property types, 1 to 4 families, second homes, investment properties. So you can do it on all of those. I mean, we traditionally use the DSCRs for investment properties, but we'll talk a little bit more about that with some of the higher interest rates. Maybe they're not debt servicing, so this might be another alternative for you on that.
Wow, that is a great product, and that is a lot simpler than like you said, than adding up all these deposits. And then the next one we have is the asset qualifier.
I just want to note one thing on that 1099 product, just so you know, you can go as high as a 90 LTV for an owner occupied property with a 720 credit score. I'll go down to an 85 with a 680 and an 80 for 660. So, there's not too many non-QM products available out there with 10% down any longer, and that is eligible. So if you've got the good score, you can do it that way for owner occupied, and it's 80 for seconds and investment properties.
That is huge. 90% LTV on a 1099. That is definitely a big one. This next one here, Kara, I'm going to be honest with you. So there's your portion of it, and then there's the bottom of my portion of it. I've done the second part of an asset qualifier, but I haven't done an asset qualifier the way that you have. Can you explain how REM does that?
Yeah, so an asset qualifier, just to explain what it is that you're using assets for income. And if a borrower maybe they sold their business and they're getting money, they got a huge disbursement of money from their business, and they don't know what they want to be when they grow up next time, but they want to buy a property. That's a great product for it. Or they may, maybe it's a retired type situation and they have a ton of assets and they really want to buy that second home now at the beach. So these are all the type of things that you may use an asset qualifier for. So there's a couple of different options that you have. There's a very simple, I call it a very simple formula asset qualifier. There's 3 types of qualifications. So the simple qualifier is you take the loan amount, you multiply it by 125%, and that's got to be their assets. So if they borrow 100,000, they have to have 125,000 remaining in reserves. There's a second one that takes into, and I got to actually read this, so I apologize for that. Because I always, there's little more details within these. So method number 2, they do 100, the post-closing assets have to be 110% of the loan amount and 25% of all other remaining debt. So if they had $100,000 mortgage, again, we're going to look at 110,000. And if they had $10,000 in credit card debt, we're going to take an additional $250 of that and say that has to be, 110%. You're going to take, if it's $20,000 of credit card debt, you're going to take another $2,000. And in that scenario, you'd need $112,000 in reserves. Number 3 is a different way of doing it, where you can do 100% of the loan amount using standard reserves, which would be 6 months pity reserves and 60 months of total debt service. So if the mortgage is $1,000 a month, 60 months of it, 5 years of payments calculated in, and that could be your reserves. And 60%, and then you take, if there's any rent loss on properties, you take 60% of that within there. Formula 1 and 2 are the ones that are usually used the most. Formula number 3 kind of comes in if they own multiple properties. That's really because you're trying to just do 100% of the loan amount, not kind of really carry a lot of what other debt they have in there. But you're talking about the type of assets that you can use. Yeah, so they're personal assets. You can use 100% of what's in there. 90% of security, 70% of retirement. And also, like you mentioned, cryptocurrency is available. So you can use cryptocurrency. They do have to cash it in, and we will use 100% of the cash in value for that.
And I think this is a great product because I am seeing, especially here in Puerto Rico, I'm seeing a lot of high net worth people who, they move here for the tax savings, obviously,
Right.
or Florida or wherever they may be for the tax savings. And they don't have jobs per se, but they have a ton of assets. And so the way that, I've done some of the loans is the second type of way was we use, whatever they have in the crypto, specifically for Puerto Rico. We do need an exception for that lender, but, we'll divide it by 5 years or 60 months and we'll take that into account. And I think that that's definitely a great product that a lot of people aren't using. They think that they have to have some type of income or they have to have some type of job, and they don't realize that their net worth and what they have in their checking, savings, or securities or retirement, sometimes it's just enough for them to qualify for a mortgage. So this
Yeah. I'm
is,
with you on that. And I think, again, we get into the season. I hate to say it, 'tis the season of COVID, because now we start to see, these peaks coming through, and not to talk about this, but then we're seeing these breakthrough cases and new variants. And every time we go into those type of things, people are looking for ways to get out of those places that maybe are a little tighter on restrictions, or saying like, why am I going to do this? And I don't want to be locked down in my house during the winter in my 2-bedroom apartment in Manhattan. I'd rather be where I can be out in nice warm weather. And I'm seeing a lot of that too. I mean, just like you get all the expats, I mean, we kind of get the same thing. They joke around with South Florida and call it South Jersey because, people come from those areas and move down here. So we're kind of getting into that season again where we see that. And you're right, they're coming in with no jobs and they got the assets because maybe they sold their property, or maybe they just have a ton of assets and, are ready to take the leap of faith and go live a different life. And I'm with you. That's that's really what we see more of, that type of situation.
I love that.
Or they just started self-employment less than a year. That's a big thing as well. When you've talked about the employment, self-employed less than 1 year, making a ton of money, asset qualifier.
Yes. And we do have some questions rolling in. So if you have some questions, definitely go ahead and put them in there and we will get to them at the end. So the next one, again, I've definitely heard about this. I haven't used it, Kara. So explain how the profit and loss program works.
So it's real simple. It is, and it's our brand new product. We just rolled it out. So with the P&L, what we do is get an unaudited P&L from a CPA. So depending on the time of year is what he or she is going to do for the P&L. So right now, if the application is within this time, we're going to have an unaudited 12-month P&L. And an unaudited year-to-date P&L from the CPA. And really, the nice thing about it is that we're going to qualify off that P&L income rather than qualifying off of, bank statements and deposits and things like that. So it's really a neat product with it. The only thing we do ask for is we ask for 2 months of bank statements to show that it supports the flow of the cash flow that's coming in on the P&L. And
Sure.
That's it,
Yeah. And Kara, can you tell us, are these also available for purchases on primaries and investments?
They are. The P&L product drops down to a 75 LTV with a minimum of 700 credit score, but that's across the board for investment and second home as well. So 75 LTV on a purchase rate and term, as well as cash out for higher credit score, 720 or better, 75 cash out, 70 on the 70 LTV on the 700 credit score.
Perfect. This next one I think is definitely a highly talked about product, but I don't know that many people truly understand it. And so let's talk about the Foreign National program and how you guys, how do you guys do that program?
Okay, so a foreign national is somebody who is in this country, on a visa usually type situation, and they want to purchase a property here. They have to purchase it as an investment property because that's the definition of it, because it becomes a business purpose loan. But they purchase a property in the United States, and they do not need to have US credit. They do not need to have a source of income because these are put onto the investor cash flows or the DSCRs. They do have to verify that they have a history of managing real estate here in Florida, and you probably see it too. Canadians are the biggest, but that's the number one that we do for foreign national. And really what they, with those type of situations, they put down they have to put down 35%. So it's a 65 LTV and our guidelines on it. But basically they verify that they've owned a property in Canada, that they've had a, rental history in Canada. And that's really all they need to do. The assets increase to a 12-month pity reserve versus a 6-month pity reserve on them. And they either have to be put into a US bank account or into one of the approved accounts that are approved through the investors, like a Bank of Montreal. I'm talking about Canada, TD Bank, Bank of Montreal, some of those other more known type of banks, and we do have a list of those on there. One thing I'm going to mention about the Foreign National as well as the DSCR, or the investor cash flow, when we do it, the cool thing about those products, because they are considered business purpose loans, is that you can originate them in some states that do not require a license. So even though you're licensed in about about 9 states, I think,
Yep.
you know, so, but you may not be licensed in New York or New Jersey, and you have somebody who wants to do one of those type of properties, whether it's a Foreign National or DSCR, you can originate those because they're business purpose loans.
Wow. Okay, so
Yeah.
that's good to
Yeah.
know. So your DSCR and your Foreign National are considered business purpose loans.
That's correct.
Awesome. That is really good information. And if there's any loan officers out here, especially in this market, you don't want to pass up the buck on a deal that you could do. So definitely make sure you reach out to Kara and see what states you can originate them
Yeah.
in.
And you're all on social media. I mean, that's really how, so much of the business is driven by, by your people these days, or at least your peers these days,
Yeah.
social media. So you're getting out there on a very broad basis.
Yeah.
And, and again, when we're going into the DSCR now, right?
One
Investor
more.
cash flow. Okay. Then I'll give you my little tip in there when we do the next one there. So the bank statements, oh yeah, we forgot about bank statements. So the bank statement, again, like you said, it's great for self-employed borrowers, but the bank statements can also be used for tip type income. So if you have a hairstylist, a server, somebody who works in the casinos, you can use it for those as well. The bank statements are used for looking at the cash flow going into the bank statement products, or going into the bank statements, and we're taking a percentage. Strictly, we take 50%, but if you can get a CPA letter or a CPA letter for their debts, for their expense ratio, or P&L for their expense ratio, we can use that instead. So if their expenses are really, guy's an IT contractor type thing, and we don't want to take 50% because he doesn't really have overhead, so it's only 20% of his overhead for materials. You can use that with an expense ratio letter from a CPA. You can do 12 or 24 months on these bank statement products. The 24-month typically will give you a little bit better on the income, but most people tend to go with 12 months. That's usually an easy one. And again, like you said, we will average the deposits in there. We will take out any atypical deposits. One thing I want to mention is sometimes people want to use personal bank accounts instead. We can use personal bank assets, bank statements in these products with 3 months of business bank statements to support that with it. And then if we use the personal bank statements, we take 100% of the deposits. So the key on these things are really to kind of talk them out with somebody like me, so we can find out what the best method is for your borrowers. And when we come down to the bank statement programs, when we do the bank statement programs, one of the nice features that Remen offers is an income calculation for you. You simply register the loan on your portal. It's you can do a manual, even if you haven't taken the application yet. You can just do a 1-page manual input on it. Send the bank statements over to myself or Alyssa, or you can do the ticket yourself, whichever way you want to do. And one of our income underwriters will underwrite the income numbers for you, send you the worksheet, and then it's put in that file. So when that file goes to an underwriter, the underwriting calculations are already done. You don't have to get it recalculated.
I mean, I'm not sure that products could get any easier if you're doing the calculations for us.
Yes.
One thing that you did get me thinking of is that a lot, well, depending where you work at, maybe you work at a high-end club, or you're a high-end hairdresser, you do get high-end tips, or you do. And yeah, I totally it went right above my head thinking about servers and hairdressers who all the time they're like, well, my paycheck doesn't really reflect, how much I make, but I make a ton in cash tips.
Yeah.
So you
Venmo, I tip my stylist by Venmo, that's the, so you've got these Venmo deposits or these Zelle deposits as well. So you can use that, which is really, really neat. And you're going right into the personal. So they may be a 1099 contractor through a hair company, through a company, but then they also have all these cash tips. The other thing that you should keep in mind with a bank statement product is if you have a borrower who's self-employed, but maybe the spouse isn't, or You have somebody who, and we can do this even with the 1099, somebody who is an Uber driver, but then they're getting Social Security and pension because a lot of retirees have taken up Uber and Lyft as a source of income. You can combine those income streams together. So we could do, if it's a case of a wife is a W-2 employee and the husband self-employed, we can take the income from the W-2 borrower and use that income and combine it with the self-employment. Or if the borrower is 1099 and, Lyft driver, Uber driver, and then also, has Social Security and pension type thing, we can use those combinations of income. So it doesn't have to be just that one stream of income.
Yeah, I think that's a great point, because I know my team has asked me before and I wasn't sure, like the husband or the wife has a W-2 job, but the other husband or wife is, 1099 or self-employed. Can you combine it? So that's a great answer.
So yes, you can. And the other thing to keep in mind too, when you talk about these type of products, which is a little different than conventional products. Conventional, you use the score, the lower of the middle score. These use the score on the primary wage earner. So if that W-2 earner actually has the higher score than the bank statement product, you can do that. And the lower credit score is not based on the minimum. So on the bank statement program, we go down as low as 660. If the secondary borrower only has a 620 credit score, we can still look at the credit score and price it on the higher credit score borrower. And it doesn't have to fit within the guideline criteria for it.
This is why I love the business. There's always so much to learn. It's always ever changing. That is some really good information, Kara. Next, let's talk about this huge product that is out there right now. The investor cash flow program, the DSCR program. Why don't you tell us a little bit about how REM's doing it, and why it's such a great product?
So the cool thing about the DSCR product is, again, it's just very similar to the asset qualifier in the sense that you're not listing any kind of job or an income. It's basically the property cash flowing or managing itself. So let's just say, for instance, your rents are $1,000 a month and your pity is $1,000 a month. That's called it cash flows. It's debt service. That's a 1-for-1 ratio. Let's say it doesn't. Let's just say, hey, I'm going to buy this property. I'm going to re-rent it, but right now there's a tenant in place, but the property's lower. It's, I'm only getting $750 a month in rent, but my pity is $1,000, but I know in a couple of months I could get $1,500 a month for this. Well, we can do that as well. It doesn't have to debt service. The other big thing that's going on out here, and I'm sure you're seeing it in Puerto Rico as well, is, Airbnb, VRBO type income. So a lot of people have these properties, have been renting them for years like this. And if they have, and we have a 12-month cash flow on it, because you can show the reports through Airbnb and VRBO. I do that myself, so I'm very familiar with them. I have a couple of properties that I do this way. So you can get the rent flow analysis on it. You can use that rental income to qualify. And if it's a property they're going to put in, they're purchasing the property and they said, you know what, I'm going to make it an Airbnb. There's a system called AirDNA, which gives an estimate of Airbnb rentals in the area. And it gives you an estimate of what the market rentals are based on your property type. If you get that information, or you can get something from the realtor, if you get that information and provide it to the appraiser when you're ordering the appraisal that this is what you're using on a purchase transaction, they will calculate the rental income not on standard market rent, but on Airbnb type rent.
Airbnb and VRBO and all of that is so hot right now that this product works perfectly for that. And people have been wondering, I know that it's kind of been changing. The market has been changing, and sometimes they weren't accepting that. But now to hear that, they are accepting what does it rent for on Airbnb or VRBO, I think makes a huge difference.
I can't speak for other investors, but I know with our product, we will do that. The other thing too, we're talking a lot about purchases, but let's look even at refinances on something like this, because a lot of these people purchase these properties for cash and now want to get their cash out of these properties to reinvest. That's the core of a lot of investors. They use their primary residence to cash out to purchase something, and now use your other real estate to cash out and purchase something. And what a great way to work with your realtors and give something back on it. So They can do cash out refinances on these. They can do a delayed finance. And so maybe they had to cut a really good deal on this property and, by paying cash, and now they want to take that cash out to reinvest in whatever way they want to reinvest. We can use a delayed financing feature on this. And here's the other cool kicker on it. And even within 6 months, usually when you do cash out refinances, as you have to use whatever they purchased it for versus the appraised value, whichever is less, if it's been less than 1 year. So if they've purchased the property, did some improvements on the property, maybe they came in with a crew and put $20,000 of improvements in the property to now make it a vacation rental or whatever they may have done with it. On a delayed financing feature, we can use that purchase price plus those improvements, as long as we've seen that they've been improved, and we can use the current value on the property to determine the LTV.
Wow,
and cash out on it.
That's huge. That makes
it is huge. That is something that is very unique to our product guides.
I was going to say, I haven't found that anywhere else for sure, because people are always saying, well, I bought it and then I fixed it up. And I'm like, you got to stick with the purchase price. So that is definitely some good stuff to know. And like you were saying, Kara, people either purchase it cash or they purchased it with some hard money. And so for them to just get that money back, this is such a great product.
The other thing too with the investor cash flow product, because it's an investment property and it's a business purpose loan as well. Again, as I was mentioning, there are 36 states where you can originate this loan without being licensed. So you have that ability for it. These can also close in an LLC. So sometimes when people are really getting into this, they put these into LLCs, especially if they're going into like an Airbnb or whatever. They put them into LLC, so you can do it for an LLC. We will allow for the first-time investor in this as well. So if they do not have landlord experience, we will allow first-time investors on this as well. As long as they own their primary residence, we'll allow for first-time investors. If, and they have to meet a minimum of a 680 credit score, the house has to debt service and they have to have the reserves. But if they do not meet that criteria, let's just say for some reason they don't have, they don't have the 680 credit score or they don't have a 12-month housing payment history or something. As long as they've owned an investment property any other time before, we can use that as their landlord history. So if they bought during the boom of 2005 and 6 and 7, and then bailed out on it later on and sold it, as long as I can get a CPA letter or a lease from that time, I can use that. So it's not tied to a 3-year rule, which a lot of other lenders are tied to.
Again, it's why I love these products. There's a lot of creative ways to still help people out there who, may have bought back then, but are trying to rebuy again and trying to figure that out. So again, this is the Investor Cash Flow DSCR program.
The other thing too on these cash out refinances, for all the criteria types on here, if you do a cash out refinance, the cash out can be used as reserves. So in essence, you can really do these things almost like no income, no asset.
That's my favorite, no income, no asset. People are like, what? And that's a hot topic and people think, oh, the market's going to burst, but it's so much different. I mean, we're having people put so much skin into the game that, if it bellies up, the lender can just sell it and still make a profit.
Yeah, exactly. Some lenders are starting to tighten up on some of these things relative to LTVs, almost anticipating that we may have hit the top of the market. So I'm seeing some compression on LTVs with some of this stuff. But really, especially when it comes to the investor cash flow, some people were doing 85, that to me, that was the steak without the sizzle. They were doing 85, but it had to debt service, but the rates were like 10.5%. So you couldn't debt service, so it was pretty rare that you were actually really able to get the 85 LTV, but yeah.
All right, team. One last thing here. Everybody always wants to know, are these products available in Puerto Rico? And yes, these products are available in Puerto Rico. They're all 30% down and they require 2 appraisals. So if you have any questions, we have the 4 National, the DSCR, the 1099, the PNL, all of those products. But in all of the other states we're licensed in, like Kara was saying, we have much higher loan to values that are available, only 1 appraisal required for them. So yes, these products are available in Puerto Rico. Here's all of our contact information. If you have any questions, definitely make sure to reach out. Kara, I do have a few questions here.
Sure.
It looks like this one is from the 1099 program. How long do you have to show income for this? And can it be combined with other income?
Yes, it can be combined with other income, which was the topic that we had covered. So I imagine that question came in through before. So if it is a borrower who recently converted to a 1099, which is kind of what I'm thinking, they were W-2 and then they went to a 1099, we will allow them to use the 1099 income. If they have been prior 1099, I'm just pulling up some of the guidelines on that. If they were prior 1099, prior W-2 going to 1099, as long as the income is consistent with it, we can use that. And a lot of times you see that where the employer switched them from a W-2 to a 1099. So we will allow a recent conversion to a 1099.
Perfect. Somebody is asking expense ratios.
Mhm.
I'm assuming they're
So
talking about, are
Yeah.
you?
I assume they're talking about like on the bank statement programs.
Yeah, I would assume. I think they're asking like, how do you hit for expenses? I know on some programs is more or less than others. Do you have a standard for that or?
When we do the income calculations, we'll automatically do a 50% on the expense ratio for business statements. And if it's personal, personal where they have business statements, we will take 100% of the personal, but we need business statements to back it up. If it's personal for the borrower who's like the tipper or whatever, we take a straight 50%. Now, if that 50% number doesn't work for the bank statement program for the self-employed, you can then get the CPA letter for an expense ratio or a P&L. So if the expenses really aren't 50%, they're 20%, we could take that number with that backup, either the expense ratio letter or the P&L from the CPA that supports that there's lower expenses.
Perfect. And I think this question probably came in after as well. They asked no credit report required for foreign national. I know that's
correct. No credit report is required for foreign national.
Okay.
I just need to verify their housing payment history in the country that they're in, which is not usually too hard to verify. That verify ownership. Sometimes they own them free and clear, which is fine as well. But I don't need alternative credit sources either.
Okay, perfect. And then somebody just asked what VRBO is.
Vacation rental by owner. So instead of going through a rental management company or a realtor to list your property and rent it, vacation rentals give owners of the properties a little more flexibility relative to doing either daily rentals, monthly rentals, weekly rentals, and they take a smaller piece of it. A VRBO or an Airbnb takes a smaller piece of the pie on that, and the vacation rental owner then manages the property themselves. They don't have a manager, they may have a management company, but they manage it through themselves. And usually people who do a property in a VRBO or Airbnb, the reason they do that is because they don't want a long-term rental. They want the quick money. They want to be able to utilize the property when it's not being used. Maybe they want to use it for vacation. That's how I do mine. I owned my property in the Keys for 7 years, and when it wasn't being rented, I'd go down and use it, so that's the kind of thing that people will use an Airbnb or VRBO for often.
That is perfect. That is all of the questions I have. Kara, anything else you want?
Yeah, real quick. I just want to show, what, I'm going to share my screen on you if that's okay.
Yep.
Okay. And if you can see this here, the states you cannot be an unlicensed mortgage originator, use the unlicensed MLO in, are Alaska, Arizona, California, Idaho, Michigan, Minnesota, Nebraska, Nevada, North Dakota, Oregon, South Dakota, Utah, Vermont, or Virginia. But let's just say you get somebody who a lead for, like I said, New Jersey. I can't remember all your licensed states, but you're in Pennsylvania. So I'm thinking like, some of the places where you touch, Pennsylvania, Ohio, Wisconsin, maybe you're getting something like that. Any place else outside of this, New York. And that's the other thing I was going to mention, because that just reminded me with New York. So, you can originate a loan in New York. So let's just say some of these New York and New Jersey people are coming on down here to Florida or coming on down to Puerto Rico, and they own their properties free and clear, and they're going to turn them into an investment property now. They haven't listed them for sale yet, or maybe they're going to keep it and use it for a couple of weeks in the summer, and then they're going to rent it out afterwards. They can cash out on those properties to go buy these other properties. And you can originate that loan, and then you can even do the loan on the other property that they're purchasing. So there's 2 for 1. And you can help kind of create that without them having to sell those properties.
Anytime you can get a 2 for 1 special, I'll definitely take that.
Me too.
Up until I think a few weeks ago, it really wasn't that I realized about the DSCR product, which a lot of people do have, investment properties, or like you said, they're moving somewhere else, but they're going to turn their current home into an investment property. So it's definitely something to keep in mind. So thank you for sharing that with us. Anything else you want to leave us with today, Kara?
No, I mean, my contact information, I think most of you know how to contact me, but if you have any questions, my email address is cdstefano@remn.com. And, I've been doing this. I mean, I hate to tell you how long I've been doing this, almost as old as Andre is. I'm 35 years in the business, but I've been over here for 12 years, well over 12 years now. So, which is kind of a dinosaur in this, it's like 25 dog years or whatever, in this industry. So I really know my ins and outs on the product and how to work it. And that's the thing. Don't just make assumptions like, hey, it fits in a box. Call me on that. That's what I'm here for. Let me help you structure it. You may be looking at it one way, and I'll ask you the right questions to get you the perfect answer on this so you can get these loans through.
I really appreciate that, Kara. I appreciate you joining us today. And
I'm going to give you one last giveaway on this, because I know you guys have been using my HELOC product with 5-day HELOC, and I'm not going to make a huge pitch for it. We can talk about that another time. But on the HELOC product, Pennsylvania is the next state to come. I should have that in the next couple of weeks, so you can do the HELOCs in Pennsylvania.
That would be huge. We're getting a lot of requests, and it's tough. So that would be awesome. You got that.
Yeah. And that should be our next presentation, is the HELOC, because I'll give you some tricks of the trade on that one. Now that we've had it in place for about 2 months, I can give you some tips and some tricks of the trade on that one too.
Let's definitely do that. So
all right.
Welcome back, Kara. I appreciate your time today. Hope you have a great rest of your day. And
all right, you too. Thank you for your time, everyone. Appreciate you.
Thanks, Kara. Take care.
Take care. Bye-bye.